so the last topic, we only have a few minutes. Uh, what is your advice to investors? And I'm not talking about trading or doing short-term ICOs. You know, for every $100 of, let's say, our reader or our audience of money to invest, let's say on a 10-year basis, how should they play this blockchain, DeFi, digital finance space? How would you advise them to invest? It's a broad question. I'm just curious. How would they allocate that $100?
Okay, without knowing the sophistication of the investor, okay, because that's a very important aspect of this, right? I would say, well, I mean, I fully believe that we, as I've mentioned throughout this interview, that we are on the cusp of the next digital revolution, and that this is a perfect storm, and that after 10 years of light progress, we're going to see a flip of the switch. So it is like I said, if I said something like in the year 1999, it's like, hey, you should invest into this internet thing. Okay, of course there was a bubble, right? But bear in mind, after the dot-com bubble, that's when eBay and Amazon and Google came about, right?
Yep.
So I think the short-term cycles aside, the long-term perspectives of investing into the next digital revolution is where it's at, as opposed to, say, traditional investments, right? Traditional investments will give you your sort of linear return or whatever it is in the best of cases. The non-linear alpha, the real quantum jumps of return will come by investing in the digital disruption. Okay, so that's point number one. Now, where do you invest? Well, I think that's a little bit of a crapshoot. If you invested into ICOs, depending on when you invested, and you could have made out like a bandit, or you could have lost your shirt, right? So the short-term timing, I think, is not. It's very hard to time, and that's playing out also in DeFi right now. I mean, 2 months ago, people were making thousands or 10,000% on all the assets that they were staking. That's a good return. But that's just dropped in the last couple of weeks, in half, basically, in some cases. So I think timing the market is very difficult. I will say that, again, that as a proxy for this, at the moment, okay, Bitcoin ain't bad. If you look at the historical perspective, I think somebody did this study. If you bought Bitcoin in 97% of the time periods, basically outside that little strip, like with the run up to the 20,000, you made a positive return. And in most of that time period, that return, I've seen charts where it compared Bitcoin with basically every other asset class, right? You have asset classes making 5%, 2%, 5%, 10%. It's all in the low double-digit percentage ranges, in the extreme.
Got it.
And then you got Bitcoin with 2 or 3 extra zeros on the return, right? 1,000, 10,000%. So I think the long-term dynamics, again, short of a catastrophic breach in trust of the entire system of Bitcoin, the dynamics are such that Bitcoin is poised to be a very appreciating asset over time. Because it's computationally limited to 21 million Bitcoin, because institutional adoption of crypto in general hasn't even yet begun really in earnest, and already you see that uptick. So I think as a proxy, if you're a very unsophisticated investor, I would not advise you to invest into DeFi or these things, because it's just too messy. I don't even play in that space. I love to. I'm a business model innovation specialist. I run a fintech research center. I'm very interested in that space academically, and also from the standpoint of business, to see how we can take that business model innovation and do a more institutional grade thing. Okay, so I'm pretty in there, right? But I would be very uncomfortable trying to figure out which protocol to invest in, and betting on the backgrounds of the people who are running those protocols, in a transparent and professional way. So I don't know if I would do that, but I would bet on the industry, meaning infrastructure in the industry, right? So I mean, there's this old saying, of course, that everybody heard, in any sort of gold rush. It's not the people who speculate. It's the people who make the picks and shovels in the original gold rush, right?
Sure.
The people who build the infrastructure. In the first generation, those were exchanges, right? Centralized exchanges. What's the next generation? It's the people who make the stable coins, the people who make the liquidity backends, the custodial platforms, the digital wallets, the cross-border payment rails, the digital identity. This fundamental infrastructure, I think, is poised for success. And you see that playing out, right? If you look at, I've been talking to a lot of these cross-border payment companies, the big unicorns in China, right? The Ping Pongs and Lian Lians and Huifus and Ant Financial now, I throw in there. They like to say that 10 years of growth happened in the last 6 months because of COVID, right? For their business in terms of adoption rates, right? I bet on those guys. I mean, those guys are going to go gangbusters. Cross-border payments is something that's here to stay, and it's only going to it's going to be the panacea to solve the world's problems at this point. So those type of infrastructure companies, I think, are good bets. Yeah.